Traders, imagine spotting a bank Nifty reversal before it happens, watching price gasp for air, then collapse 400 points in minutes. No indicators cluttering your screen, just raw price telling you exactly what institutions are doing. I'm Trading Core, and in this deep dive, we'll master 5 powerful price action concepts that actually work on Nifty and Bank Nifty. We'll start with the exhaustion breath, the one setup that catches fading momentum like clockwork. Then, we'll layer in the QUASIMODO pattern for trapping reversals, bullish engulfing at support for clean entries, supply and demand zones for institutional edges, and pin bars with inside bars for breakout precision. These aren't random ideas. They're battle-tested from real Indian market charts in 2025, backed by strategies from pros at Ventura Securities, Motilal Oswal, and more. If you're tired of losing to fakeouts, this video's your game changer. Let's get into it. Why price action rules the Indian market? First, why price action? In the NSE's wild ride, think RBI rate cuts spiking Nifty 500 points, or global news dumping Bank Nifty 1000. Indicators like RSI lag behind. Price action reads the market's pulse in real time, highs, lows, closes, and wicks revealing buyer-seller battles. For Nifty and Bank Nifty, it's gold. These indices trade with massive FII volume, creating clear patterns from institutional plays. No need for fancy tools, just a clean 5-minute or daily chart on TradingView. Risk 0.5% per trade. Focus on London overlap 2:30 p.m. IST and you're set. Remember, 90% of retail loses because they chase. Price action teaches you to wait for the story to unfold. Concept 1. The exhaustion breath. Fading momentum. Like a pro. Number 2. Risk C. Red flags can build. Weak C5. Let's kick off with the exhaustion breath. The concept that spots when a move is running out of steam. Picture Bank Nifty ripping up 300 points post-open. Retail jumps in, but smart money's already selling. Here's how it works. After strong momentum, say 3 big green candles pushing 200 to 300 points, watch for breaths, weaker candles signaling exhaustion. The first breath, a candle with a tiny body 20 points versus crier 80 to 100 and a rejection wick up top. Price spikes but gets smacked down. That's sellers testing. Second breath, another weak one, body shrinking to 15 points, wick even longer. Momentum's dying. Third breath, your signal, close even weaker, wick dominant. Enter opposite the move on that close. Why? Institutions fade retail euphoria, selling into strength for better fills. Those breaths are them loading shorts quietly. On a 5-minute Bank Nifty chart, spot the spike. Step 1. Count breaths. Step 2 to 3. Enter. Stop 10 to 15 points beyond the highest wick. Target 3 times risk. 10:15 a.m. Bank Nifty climbs to 58,242. First breath at 10:15. 10-point body. Wick to 58,242. Stop 58,264. Price dumps to 57,950. Plus 265 points. 4R win. In reverse for longs, weak reds with lower wicks after dumps. Tuesday, 14th October, 12:15 p.m. Dump to 56,252. 3 breaths. Long at 56,282. Stop 56,231. Rip to 56,549. Plus 110 points. This nails 65% wins with 2.8R average. Because it's pure psychology, not guesswork. Concept 2. The QUASIMODO pattern. Trapping retail for reversals. Moving to the QUASIMODO pattern. A beast for catching trap traders and reversals. Named after the hunchback for its uneven structure, it's where price makes a high, pulls back, breaks lower for a new low, then reverses up, trapping shorts, or vice versa for bears. Why it works? Institutions create fakeouts to grab liquidity. Retail sees a breakout low and sells. Big money buys cheap, reversing hard. Perfect in trending markets or range to trend shifts on Nifty. Identify on 4H or daily charts. In downtrend, left shoulder high, Head low, right shoulder high or low, forming a hunch. Confirmation, price breaks structure but fails, wicking back. Entry, buy above the right shoulder high in bullish Quasimodo. Stop below head low, target, measured move, head to shoulder distance projected up, or next resistance. Aim 1, 2 plus risk reward. For Nifty day trading, use daily for context, 5 min for entry. Example from October 2025, Nifty daily shows downtrend to 24,000 head low, right shoulder at 24,200. Enter long above 24,300, stop 23,950. Targets 24,600, hit plus 300 points as FIEs bought the dip. In Bank Nifty swings, similar, but watch for higher volatility. Last month, bearish Quasimodo at 56,700 high, trapped longs, dumped 800 points. Avoid in pure ranges, it fails without momentum. Backtests show 60% wins in trends, turning 1 rupee lakh risk into plus 20R monthly with discipline. Concept 3, bullish engulfing, at support, a classic for bottom fishing in uptrends. This 2-candle pattern, a small red candle down day, followed by a big green that swallows it whole, body engulfing the prior. Why? It screams shift, sellers exhausted, buyer storming in. At support historical floor like Nifty's 24,000, it's dynamite, price bounces where it has before. Identify, on daily Nifty chart, spot downtrend hitting support, look for the engulfing, green body covers reds open the close, volume spike confirms. Entry, long above engulfing high, stop below support or engulfing low. Target, next resistance or 1-3 risk. Nifty 50 example, correction to 24,000 support previous low. Small red, then engulfing green. Enter at 24,050. Stop 23,950. Rally to 24,350 plus 300 points. Modal Oswald Crows swear by this for Nifty uptrends post-corrections. For Bank Nifty, same, but intraday on 5-minute October 23rd dip to 48,000 support. Engulfing, long entry plus 400 points up. Combines with trends, only in uptrends for safety. 55 to 65% win rate. Filters noise in India's news-driven market. Concept 4. Supply and demand zones. Institutional footprints. Next, supply and demand zones. The real institutional edge. These aren't lines. They're areas where big orders cluster. Demand. Buying zones price reverses up sharply. Supply. Selling zones down reversals. Why? Institutions leave footprints. Explosive candles from imbalances. Fresh zones untested are strongest. Repeated hits weaken them. In NSE, think earning spikes creating demand. Identify. On charts, mark bases. Sharp reversals with volume. Demand. Below up moves. Supply. Above down moves. Use multi-time frames. Daily for Nifty zones. 5 min for entries. Entry. Retest demand. Buy on bullish candle. Stop below zone. Target opposing supply or measured zone width projected. Ventura example. Infosys demand. At 1,350 rupees. Pin bar rebound. Enter long on retest. Stop 1,320 rupees. Target 1,450 rupees. Hit plus 100. For Bank Nifty, supply at 48,000 round number. Short retest. Dump 500 points. Risk 0.2% below zone. Works 70% in trends because it's where FIIs accumulate. Layer with engulfing for confluence. Concept 5. Pin bars and inside bars. Precision breakouts. Finally, pin bars and inside bars for surgical entries. Pin bar, small body, long wick 2 to 3x body, rejection. Bullish, lower wick at support. Bearish, upper at resistance. Why? Shows failed probes, institutions rejecting levels. Inside bar, narrow candle inside prior's range, coiled spring before breakout. Identify, pinned zones with volume. Inside, after momentum, near support resistance. Entry, pin, buy above bullish high. Inside, breakout above mother high. Stop opposite extreme. Target 1, 2 plus. Bank Nifty example, pin at 55890 support. Long above wick, plus 300 points. Inside and Nifty consolidation. Breakout to 25,050. Ventura highlights these for ICCIB earnings plays. Combine. Pin inside and inside bar for nukes. 60% wins. Tight risks. Which concept hits first? Exhaustion, breath, or Quasimodo? Comment below. Trade smart. See you next time.